of it. For today's, we're going to do the principle of bookkeeping control. And this is the second unit on your level 2 qualifications associated with the bookkeeping. Some colleges normally teach these 2 units alone to give you a bookkeeping qualification. Then you can move to level 3. Some colleges do this as a part of the wider level 2 qualification where you learn business environment and the costing unit to give you a full level 2 certificate. But with this unit, you will find the most advanced or the intricate knowledge of the double entry is going to be applied in here. The first unit, the introduction to bookkeeping, it's basically an introduction. They're going to teach you what is double entry. They're going to teach you about because of prime entry and the ledger accounts, subsidiary ledger accounts, the trial balances, and processing, payments, receipts, all kind of a general day-to-day activities. This nowadays doesn't get done manual. It gets done by accounting software. So all you need to do is find the right option and enter them the right number, and it will give you all the correct outputs without having to have any accounting knowledge at all. But that time, so many people say, I want to know more about it. So that's why you learn that double entry bit on the manual side of it. You learn how to do the debits and credits. You learn about debt click. You learn about Alice. You learn about all sort of different things to do with double entry. But when it reaches principle of bookkeeping control, those things are your foundation. But now you're going to take a few steps upwards. This is the part the accountant is going to really stand out. You're going to stand on top of any other person who does not have no accounting knowledge at all, because here where you're going to learn about the more detailed part of the accounting first time. You're going to learn about processes where only you know how to do it. A person from your organization which have no accounting experience will not know anything about it because they will not have the right training for it or right exposure for it. So in this scenario, when we do the bookkeeping control units, in certain places, you will hear, we will trace back to our bookkeeping knowledge from the double entry before, but it will be minimal. We will not think too much about it. This is going to be completely off track. We're going to go in a information supervised way. But please remember, this is the supposed to be the most difficult of the level 2 qualifications. When it comes to the difficulty means this has the lowest of the pass rate of all 4 level 2 units. Even though the level 2, there's a unit called business environment where you have to have a bit of a writing skills tested there as well. But that writing skills could be overcome by, just having some general knowledge about lots of different things. But in this principle of bookkeeping control unit, you cannot just survive with the general knowledge. You need to know your accounting in and out. You need to make sure you have to research, you have to do all your work, and you have to do your due diligence. You must learn and you have to revise, you have to practice your questions, and you also ask yourself the question as well, all right, how I can improve on this one. And you pass this unit, I'll guarantee you that this will be your foundation setter for your bookkeeping qualification you're going to get in level 3. Because if you do this well, the level 3 unit is going to be like a walk in the park for you. You struggle here, that is going to be a huge detrimental towards your further qualification. So you need to make sure, put your maximum effect on the bookkeeping control unit. So without further ado, let's look at some of the slides I have prepared for you. So here, so what we're going to look at today, we're going to look at 2 things. One of them is bank reconciliation, and we're also going to look into the journals. We'll learn about the journals a bit later, but the first thing is the foremost, the bank reconciliation. This is one of those things an bookkeeping assistant in your workplace should know how to do. What is the bank reconciliation statement? This is to identify and understand the difference between the cash book and the bank statement balances. You normally maintain a cash book within your business, but that cash book is your document. And then you also will get periodically a bank statement from your bank where you keep your money. But that bank statement itself, it's a mirror image, supposed to be the mirror image of your cash book, because whatever you say debit in my cash book, which is money in your bank statement will say credit, because it is their document. Because for us is money coming in, for them in their bank, that money they have to pay it back to us. So therefore it is an opposite option for you. So you have to remember that one will be a mirror image. It won't be a carbon copy. Carbon copy means exactly same. Mirror image means if it's a debit, it's a credit there. If it's a credit, it's a debit there. So you test your balance against a third party document. But that third party document sometimes can reveal so many problems within your own accounts, because you guys, you have to remember, we are not perfect. Even though sometimes we may think the bank also make mistakes, but it is seldom they do that. We make mistakes on our side. Bank reconciliation statement allows you to identify errors or potential fraud as well. Maybe one of the employees can fiddle the number and probably take some money from the bank cash book and then put in for their own accounts. There you may find those frauds also if you do a bank reconciliation against the bank statement. So you have to remember, guys, this is something you do regularly, like end of a period, end of a week, end of a month. It depends on how busy your business is. So you reconcile your cash book with your bank statement and you prepare something called a bank reconciliation statement. This is the balance you compare against, and then you will explain the difference between them. You need to remember, even after you've done all the work, balances still may not match. Maybe it is down to certain consideration. We have to think about that, because there is a potential way some of your transaction might not have happened yet in the bank statement. We'll come to that later. So here, first thing is we're going to put those cash book and your bank statement next to each other. First thing we do, we check against both of them to see anything on both of them, and we tick them off. Once we tick them off, that means they automatically matched. They matched means I don't need to worry further about them. But you have to also remember, guys, sometimes even you match it, it may be on the wrong side. So you have to be careful about that as well. So you just see the number doesn't mean it matches. You have to see whether it's on the right side as well. But after you've done all the match, what do? You check your bank statement for anything left on the bank statement which are not in your cash book yet. For example, something like a bank charges, interest, any other automated payment. These ones are in your bank statement. What is the meaning of that? The money is already been either added to your bank balance or taken away from your bank balance on the bank statement. But they are yet to come into our cash book because we are not aware of it. Certain things we may not know until you see the bank statement. So what we do, the prudent thing is for a bookkeeper is to find those transactions and we update our cash book with them. So that means there is a bank charge of £10 on my bank statement. What we'll do, we go to our cash book, we credit the cash book with £10 bank charges, and there is an interest we received from your bank. It is for £20. What we're going to do, the money came into my bank account, therefore we're going to go to our cash book and we debit our cash book for that £20. You may also have something like a direct debit payment for your utility bill. £300 for gas and electricity just went out, like it went from my account last week. Not £300, it's £180 or £200 or something like that. Yeah, some people say, yeah, during the winter you of course going to pay more. During the summer I pay half. Suddenly in the winter it just goes up. So what we're going to do, unless you see the bank statement, you will not know that. What we do, we'll update our cash book as well. So and so, sometimes customers may pay into your bank account without even telling you by sending you a remittance advice. You see that once you receive the bank statement, there's an anonymous money coming into there, and then you traced it back to one of your customers. Customer has paid it. What we do, we go into our cash book, we update the cash book, and then of course we'll update the receivable ledger control after that. That is after we've done all of it. Those things will be updated, and once you update all of those transactions, all your bank statement transactions now match what's with your cash book. Nothing left on your bank statement now to worry about, because they cleared all the things we put in the cash book now. But similarly, in that case, cash book may have something there which may not be in my bank statement yet. We'll get to there in a minute. But once you've done the update of the cash book, what we do, we need to total those numbers and find a revised cash book balance. That cash book balance is what we know, my updated balance, which you're going to tally with my bank reconciliation statement. We'll get there eventually once we've done all of it. So here, the items in the cash book, but not in the bank statement. There are two major items that recorded into the cash book, but which have not yet been accounted for in the bank statement. What they could be, now we know they are. They are going to be something called unpresented checks and uncleared or outstanding lodgements. What is the meaning of it, you may ask? Let's say here, nowadays, we don't use much of a checks, but in the past we did, and we still use that kind of a the thought process or the learning understanding to say what happens if I issue a supplier with a check. I give them a check now. What I will do, I will write it in my cash book. My cash book will say credit this amount, money went out to my supplier. But that supplier, it can put the check into the bank straight away. They can do that straight away, or they may have not done it yet. Even though they may have put it in the bank, it might take few days to clear as well. So therefore, that check, it might not show in my bank statement as cleared. So that is what we're going to call as an unpresented check. Sometimes they put that check on the last day of the month. It is more likely that will appear on the following month's bank statement. So we call that an unpresented checks. But what are the undeclared, uncleared or outstanding lodgements? These are the ones we received ourselves from your customers, or anything from your sales proceedings, or from any other activities. Those monies, including checks, we go into the bank branch later in the month and we put in them, on the bank. But the bank takes time to clear them. Therefore, we have yet to see that money appear on our bank statement as well. That means once they received, that will increase my bank balance. On opposite to that one, the unpresented checks, once they go through the bank account, it will reduce my bank balance. So that two concepts we have to remember. Within the bank reconciliation question, it is likely to have deal with both of these. So essential you understand each one of them. Uncleared lodgements get added to your bank balance in your bank statement, though, not your cash book. I'm talking about bank statement. Unpresented checks get taken away. So here, compare the numbers and then tick the items, update the cash books, and bring down the cash book balance in step 2 and prepare the bank reconciliation statement. So the bank reconciliation statement will look like this. We'll have the closing balance of the bank statement. We add any uncleared lodgements or outstanding lodgements and take away or less unpresented checks. Can you notice that here we just put a brackets there because this get taken away. Sometimes they tell you do not put negative number there. We'll come to that later because they will give you instruction how you do it. They only may say to you, use these balances negative if your bank is overdrawn. Sometimes remember guys, your bank account can have a positive number if you have money. If you have an overdraft, it will show you a negative number. You're overdrawn. So therefore, you have to use negative numbers in these two. But anyway, we'll see some examples. I have 4 nice questions. We can try on them, old style and new style. Okay, so here, that is the bank reconciliation statement. So let's have a quick look at the question, shall we? So let's say here, share screen, Excel. Yeah, let's get to the Excel. Let me get rid of this. Then I can go into Excel straight away. All right, now these are the bank reconciliation questions I have. I have 4 of them, and they are from either Kaplan or Osborne books. They are the books we use within our teaching programs. So I managed to find some questions there. We'll be able to have a look into that one. So let's say here, there is a cash book entry. There is a cash book here, and then also you have a bank statement. So the job is now to do the reconciliation, and they're asking you check the items on the bank statement against the items in the cash book and update the cash book accordingly. Total cash book and show the balance carried down on 31st of January 2023. And then they ask you to prepare the bank reconciliation statement. So what I'm going to do now, quickly, I'm going to check whether I can find the information it's required. So let's say here, if I can find the drawing option. Yes, I found it. Okay. So here I have the opening balance. So let's say here, that one, it's there. And that one, it's there. So I'm going to take those 2 there. And then we have here one side debit receipts, and here also some amounts there. Let's work on them. Can you see here that J Baker 495.60, and this amount, it says credit there. That means it's been credited to the bank account. So that is absolutely fine. But that shorten, it's not there. So is this TK supplies, and then the bank interest. They both are not showing there. So we could not do anything with them. What we need to do, we need to update the cash book with it. So we will get there in a minute. How are we going to do that? Let's look at this checks now. On the payment side of it, there is a payment side of it. 1351 for £100. The check is there, and that one is checked. Curtis, it's there. 398.50, 398.50. 229.70, it's there. 229.70, it's there. P Bryant, which is 1354, it is not there. So we're going to put a next to it. And P Reed also, it's not there. We're putting a the cross next to it. And then also there is a direct debit for Omni Finance, which is not there. So what you can see now, we managed to find in my cash book, these tick transaction appeared on the cash book here, also the bank statement here, and they are 3 transactions which is in my cash book, not in the bank statement yet. And also there are 3 transactions in my bank statement not yet appearing in my cash book. What is our job now? We need to make sure we go back in there, we update the cash book with those 3 transactions. This one be backs, this direct debit, and the bank interest. Some of them are money in and one of them is money out. So what we'll do, we update our cash book straight away. Let's say here, how much was the cash book balance? So let's say, let's draw this quickly. I'm going to draw this way. No, that's fine. Home. Okay, so let's draw the cash book. So let's say here, top border, left border. Okay, so let's say here which side we have the most money. So let me get my trusty calculator from the computer out. So we have that number. So let's work out the debit side of the cash book. 800 50 plus 495.60 plus 335.75. So we have this number here. We'll put it down on the debit side, and then the credit side was £100 plus 398.50 plus 229.70 plus 312 plus 176.50. So you have we have those two numbers there. So what we need to do, we need to update these three transactions. So here we're going to say TK Supplies, the amount is £716.50. Now, once I've done that, this and this straight away reconciles because we have already checked it and we reconciled it. And we also have a bank interest, which is for £5.50. So I'll put that £5.50 as well. No, get rid of it. Yeah. And then here we have for Omni direct debit, £207.95. So what we're going to do now, let's work out the totals. The total is going to be sum of all of this. And then we got that here. And then let's see the difference between those two is equal to that minus that. So let's change the formula to include this. Oops. Yeah, it's a connection, isn't it? So control Z. So let's say here plus that number. Will that work? No, it won't work. So let's say here, oh, let's leave that number here now. So this is my new balance carried down because it is a nested formula, so it won't allow you to use that number there. But let's say here, yeah, it's come up with the same number now. Okay, control Z. Okay, so this is the new balance board down figure. This is the number we need to achieve when we're going to do the bank reconciliation statement. So let's go back here and draw a bank reconciliation statement. What is the closing balance? Closing. I have a copied one anyway. So let me see whether I can find the bank reconciliation statement. Here we go. I do have one. So I don't have to redraft it again. Let's put that down here. Okay, now let's say here, what is the number we have for the closing bank statement? It's going to be £1,081.95. Okay, so what we now see, this is the closing balance of the bank statement. What are the things we have in our cash book as our timing differences? Less any unpresented checks. The unpresented checks are this one for Bryant and Sons. So we're going to say Bryant and Sons, and the amount is for £312. So I'm going to say here £312. And then we have one for P. Reed. P. Reed is for £176.50. So we got those two are taken away. And outstanding lodgement is G. Shotton, 335.75. G. Shotton, 335.75. Here, I'm not using no negative numbers. In the exam, they will tell you as well, only use these numbers, the opening balance and the closing one, as a negative number if there is an overdraft. Because simply we saying here less in this scenario, we say less unpresented checks, add outstanding lodgements, we automatically assume this number will be taken away from that number there. So let's do the formula. This one is going to be equal to that plus that. This is a subtotal. and this is also will have a subtotal of equal to that number now. So what we're going to do, this one will be this minus this unpresented check and add any outstanding lodgements. Let me see what is the number I'm getting there. £929.20. Am I get that number here as well? £929.20. So my bank reconciliation has indeed successful. We have successfully obtained the number we are looking for in this bank statement. Now guys, can you go back in there and trace it back again? Can you see how we going back and forward with it? First thing is we update the cash book. This is my cash book. Cash book debit side, update it with anything on my bank statement which is not yet in my cash book. These two numbers we have done it. After that we have done this particular Omni Finance, which is the payment money out from there. We have put that down as well. Now we updated the cash book. We managed to find a new balance carry down figure or the balance board down figure. It does not matter. Both of them are same because one of them is on the other side, will become a debit later on. So here £929.20. And luckily we have done the bank reconciliation statement. It end up giving you the same number as your adjusted closing cash book balance there. Guys, again, this is step by step. You must do that. You can't jump to one to another. You cannot do the BRS without doing the cash book. You must do the cash book first. Okay, let's look at this second question now. They're asking you here, there is a bank statement. They also given you the cash book. They're asking you, check the items on the bank statement against the cash book, update the cash book as needed, total the cash book and show that clearly the balance carried down on the 31st of May, brought down at 1st of June, and prepare the bank reconciliation statement at 31st of May 2025. Luckily, we are able to do this because 2025 is long gone. We are in 2026. Luckily, this year we can use that one, which agrees to the closing bank statement balance with the closing cash book balance. So we're going to do the exactly same thing again. So what I will do, I'll copy this format and then paste it here, but I will get rid of all the numbers. We don't need the numbers. We change the numbers again. Now let's say here we matching the information we need. Okay, so let's quickly check it. But there is a problem. Can you remember when I went back in this question, there is an opening balance of £800.50 and there is an £800.50. Both of them were fine because they have both the same opening balance. In this scenario, straight away, somebody threw a wrench in my works. I have two different opening balances. If you notice this here, this opening balance is £3,802. In this scenario, it's £3,652. How in the world that is even possible? It is certainly possible. We see the reasons behind it. This is because there is one of the timing differences from the previous period now eventually appeared in this month's statement. Remember guys, last statement here, there are some checks. These checks, we given them out. We expect them to appear in my bank statement. It didn't appear. You can't see them here. When they will appear? They will appear on the following month. Given the recipients go to the bank on time and cash it. This is what happened here. Can you see the first check number we issued on that month is finishing with 6-2. But there is a check with 6-1 there. Where's that come from? This is one of those checks we have given last month. It only appear now. So this eventually, once it cleared, it gives you the right opening balance you're looking for. Can you see here? That right opening balance, it is achieved once this check is cleared. So for us, when we're going to do the reconciliation, we will tick this and this and this together with that one to acknowledge this is now reconciling the opening balance. Sometimes it will not be the first entry. It will be the third, fourth, fifth, maybe even the last entry might be there. So we have to be careful. Do not just look for that one. Just look at the difference between them. If you look at the difference between those two numbers, I have £150 and I look for that £150. There is only one candidate, which is this check number 451761, and we reconcile the opening balance now. Now let's carry on what we done as usual. So here there are check 62, that check is there. 63, it's there. 65 is there. Can you see here 62? So that number is done. 63 is there and 65 is there. The 64, it's not there. So we're going to put a tick next to this or cross next to it. And now we look at the debit side. None of them are matching. So can you see here, these numbers does not exist there. And that number also does not exist there. So these are all now has to be reconciled properly. And also see here, all of these direct debits and the bank charges, they all are missing. So I'm going to make sure I update my cash book with those information there. So here, let me quickly go back in there and get rid of all the borders. So I can do the cash book as I'm looking for. So let's say here, how much is my cash book balance? So let's say the cash book, let's see, 3652 plus 832 plus 1119. Okay, 3652 plus 832 plus 1119. It gives you 603. And then the other side, we have 751 plus 268 plus 1895 plus 1045. I have 3959, 3959. I have two of those balances. Now what we need to do, guys, I need to update these 5 transactions into my cash book. So let's say here, that one from Peran, Texas. How much is that Peran, Texas for? 2596.00. We have that number now. And then in this side, we have Y1 Council. We have A1 Insurance. Then we have Okaro. And then the last one is bank charges. Okay, so let's put those numbers up here and find the new balance carried down. So what is this number for? Is 198 plus 1005 plus 254 and 20 pounds. So we have all those numbers now. Let's work out the difference and how much is my balance carried down is going to be. So it's going to be this plus that number, and this one is going to be equal to, let me do a shortcut. Do the sigma, enter, and now the difference between them is going to be my balance carried down. So let's say here, 2,763 pounds. Okay, that is the updated cash book balance. My cash book should have this after we done all the updates from the bank statement. So what we know now then, all of this can be ticked saying this now updated in my cash book. What we have left at the moment, guys, we only have left the timing differences, the outstanding lodgements and unpresented checks. So let's say here, balance as per bank. Okay, how much is the balance per the bank statement? The bank statement balance according to this, 2,707 pounds credit. That means we have money in the account. Just be careful with this, guys. If it says C here, that means they are on credit. That means we have money. If it says D, means that is a overdraft. Just be careful with it. So add any lodgements. What are the lodgements we have here, guys? The lodgements are the 1 and 2. These two monies we have not yet seen here. We need to make sure they get added on. So here, J. Ackland, How much is that for? £832. And then we have stamp, which is for 1119. Okay, so these are the ones we need added on, and then less unpresented checks. Okay, so what are the unpresented checks we have? We have for Curtis Cars, and that is for 1,895. Now let's do the updated cash book balance. So let's now provide with the bank reconciliation statement. We add these two numbers together with it and take away this unpresented check. What number you think you were going to get, guys? The number should be the updated cash book balance. Can you see this updated cash book balance? We have 2,763. Will I get it here? Let's see the moment of truth. Yes, I did get that same number again. See, £2,763, and the same number has appeared on my bank reconciliation statement. So I'm going to now move on to one of the exam style questions I have seen before. I think I'll only do this one, not the last one, because this one is similar anyway. But this one, you have seen it from what we call the Kaplan books, and this is what you see in the newer exam style. They have now gone to this kind of a model questions now. So let's say here we do the same way. We look at the opening balance now. Opening balance is 16,467 pounds, and this opening balance is 10,314 pounds. We have a problem. So let's check what could be the reason behind it. What could be that? Okay, so let's say here, let's get the calculator out and check what is the difference. 16,467 minus 10314. The difference between them is 6,153. What could that be? Can you check it here? There is a check. 00654. It does not have the tone because the first check we issued out is for Old Flowers, the Color Zone, and Tea Trees. And that one, it doesn't have numbers there, so we cannot verify it. But what you know though, once that check is paid out, the balance of that amount will automatically would have come down. So this could be the reason behind the differences. Can you notice that here, this starting as a credit balance? What is the meaning of that? We are overdrawn. So this overdrawn balance now will increase because a check would have created the debt to be increasing. So if I'm having more money paid out, this number will eventually become 16,467. So what we will do, we will reconcile those numbers here. This check tallies with this opening balance. So these two will result in that number. But since we start this as a negative number, eventually when we reach that figure, we have got a positive balance carried down, because this balance carried down will become a debit number. So that means now we have money in the bank account. Can you notice that is proven in this as well? These two have D next to it. After that we have C, means these will be money in the bank account. We have money now. We no longer in overdraft. Okay, so what we're going to do now, we're going to carry on with all of those information we have to see we can match all of it. So here, first one, 5697, it's here. 5697, 5897, yes, it's there. 5897. Then we have 5397, it's there. 5397. 4197, it is there. 4197. This is not there. G Golden is not there. And this counter credit of £1,500 is also not there. We cleared one side. Now let's look at the credit side and the payments. There is amount for Old Flowers, 1,800. It's not there. And then we also have 3,690. It is there. 2,358. It is there. And then we have one transaction here, which is not there, 336. So what we now going to do, we're going to read through this, update the cash book, and then we will draw up our bank reconciliation statement. So let's go back in here. They're asking you closing balance board down. So please be careful with this here. This one, in this scenario, they're asking you what is the balance board down. Here you have the balance carried down. So what we need to know, this number would have been appearing on the debit side, guys. So this 570, it is the debit. Please remember, guys, carried down, if that is on the credit side, the board down has to be on the debit side. That's your double entry from your previous unit. I'm not going to be emphasizing any further. So what are the adjustments we have? We need to update the cash book with anything in my bank statement, but not in my cash book yet. Okay, so what is the two entries we have? This counter credit of 1,500. So here, counter credit. This one, money coming in now. It adds to that total. And then what we have direct debit, electricity, and that is money going out. £336. Now they're asking you adjusted balance carry down. Now can you see here they want the carry down figure? It is similar to this one. It's going to be on the lower side. So what we're going to do, we're going to find what is the adjusted balance carried down, add these two and take that number away, and it's £1,734. My cash book now has a balance carried down figure of 1,734 on the credit side. Eventually, that will become the balance board down figure. But in that case, do I have money in the bank? Absolutely. According to this, I have a debit balance board down of 1,734. So this one is definitely money in the cash book now. Okay, so according to the bank statement. So let's say here, according to this, what is the bank statement balance, which is £837. This is my closing balance, and this is not overdrawn, so it's going to be a positive number. We're going to leave that as it is. Add any outstanding lodgements. What are the outstanding lodgements? Which is in my cash book, but not in my bank statement. One of them is G Golden. And that is how much is that for? £2,697. This one will be added to your bank statement when you get the money, once it cleared, okay? And the next one is the unpresented check. It is for all flowers, and it is going to be, once the check is clear, it's going to be reducing my bank statement balance. So what is the amount now we're going to see here? This plus that number minus the old flowers, it's £1,734, and we got the same number again. Voila. Can you notice this, guys? This is the magic of bank reconciliation. You need to tally up all those missing numbers here and there, and then you carry on, clear everything, match all of them, update the cash book, and draw up the bank reconciliation statement, and that will match with your updated cash book balance there. So this is the new style question you need to look for. So what we're going to do, guys, next thing is we're going to look into further slides to look at the journals in a short way, because I'm going to teach journal in 3 weeks again when it comes to the errors and all the where's the slides? I need to start the PowerPoint presentation again. Yeah. Okay, Windows. Okay, now it should come up. There, I got it. So here, now we're going to look at the journals now. What is the journal? Journal is something we use where we don't have anything else where we can record it. That means it is a book of prime entry for non-regular transactions. That means it covers anything. It's not covered by sales day book, purchase day book, cash book, sales return, discount received, discount allowed, purchase returns, anything like that way. We don't have a book of prime entry. That means we use the journal instead. So it allows you to use the book of prime entry for non-regular transaction. It reduces the risk of fraud by making it difficult for unauthorized transactions to be recorded. So that means every time you record something on the journal, you're going to put a kind of a note next to them, what we call a narrative. The narrative will explain why we made a transaction. So if somebody looking into that, they will ask a question, oh, why you done that? Because sales day book is purely for sales, credit sales. Purchase day books for credit purchases, cash book for anything monetary, money in and out from your bank or the cash account. So if you do any other transactions, you use the journals and you record some sort of a narrative next to them to give you an idea of why we done the transactions there. So it reduces the risk of fraud. And it also reduces the risk of error by listing the transactions that are put into the double entry. That means once you've done the journal, that is a book of prime entry, means they eventually will go into the general ledger after that. Okay, so that way it gives you chance to reduce the amount of errors you commit. And its all sort of entries can be traced back to an authorized financial document. So that means if you have a journal, you should have some sort of a corroborating evidence to go with it, and the journal will allow you to do that. So here further, for example, what are the transactions we're going to do? We're going to say non-regular transactions such as the opening entry of a financial period. We can, yeah, it's been recorded again anyway. So this is how a journal will look like. So if you have date, detail, if you have a reference, we'll say what is the journal number. We have a debit and a credit. You have to remember, guys, it must have at least one account in debit and one account in credit. It's the minimum requirement. You cannot do a journal entry just for one debit or one credit. But you can have multiple debits and one credits, multiple credits and one debit. It does not matter as long the debits are matching your credits. So once you've done that transaction, we put a narrative underneath it saying opening capital introduced. That means the money have put into the bank account, debit the bank, and the capital account is credit because we didn't have the cash book recorded yet. Now, we also will look into some of the payroll transactions as well. So if you guys remember, when somebody employs you, they will offer you a salary. For example, a salary is what is your remuneration. Is that all it costs for the business to employ you? That is the first question I ask. It is not. Why? Because employers also will have their contributions. What sort of a contribution they're looking at? The contribution like they have to pay for your national insurance. Same as you pay from your salary, they also pay national insurance from their side. We call that the employer national insurance contributions. So in short form, we will say ERNI, something we pay from ourselves. We call it employee national insurance contribution. We call EENI. It's an abbreviation. And also, same way, by law, your employer must contribute towards your pension if you're paying into a pension scheme. If you don't have to pay pension scheme, they may not pay for it. Okay, that means as long you contribute, which is now by default, you'll be enrolled into a pension scheme if you work more than a certain hours or earn certain money. The employers will match that one or sometimes exceed that as well up to a certain amount. Okay. Currently, my contribution, I pay like 7 point something percentage for my gross salary. And then that pension contribution is tax deductible. That means there won't be charged tax on it. Okay. No tax will be charged on that one. But my employer will either match or exceed the contribution I make as well. So that they are what we call the employer expenses towards your salary. So what we will do, quickly, let me show you here. We're going to introduce you something called a wages expense. So let me see whether I can share it with you in the share screen. That's easier. Okay, so here, so the money you're going to be earning, for example, for a business, you have your gross salary plus employer NI and employer pension contribution. All of these together for you, together, what we'll call it a wages expense. So this wages expenses is really what you pay if you employ somebody. If I'm the employer, this is my cost. My cost is going to be the salary I pay you plus the national insurance contribution and the pension contribution from the employer side. But for the employee though, for example, if you have salary, from your gross salary, you may have elements you pay out. For example, you may know something called a payee. What is that payee? That is going to be, what is that again, guys? If you know that, pay as you earn. That is the income tax. It is different bands. We are not going to learn about how to calculate them. We only know how to account for them. If you want to know how to calculate them, you need to do a payroll course. Unfortunately, AAT doesn't do that here in level 2. You probably can learn about the personal taxations in when it comes to level 4. Then you also have your own employee NI, that is your national insurance contribution, and then you have employee pension contribution, and you may also have other things like union, student loan, you have charity, you may pay what do you call again, a child care token, child care vouchers. You may also have attachment to earnings, that means you have a county court judgment against you. You have to pay whatever something you earn. You may have also maintenance payments, These things, once you get all of those deducted, eventually, once you had all of that money paid out from your bank account, you will, you will get the net pay. This is the one comes out of your bank account. So for the business, when I'm going to account for it, there is a particular way they do it, because they have so many different entities take money from your gross salary plus something from your own pay. We need to make sure we identify all of those beneficiaries, and we need to apportion the money to those relevant parties. For that, we create a control account. We've done the control accounts before in my initial bookkeeping units. We've done the control account for sales or the payables, receivables, VAT. Now what we call here is the wages control. What it does, the wages control account allows you to make this wages expense and go to the relevant parties. So for that one, the first journal entry normally will be we're going to debit the wages expense account and credit this wages control account. Once you've done that, wages control account will start with the credit balance, and we will start finding all the liabilities we need to pay towards, and we'll be able to find the right amount and pay towards them. So let's say here there is an example question here. How are we going to do that one? And let's see how that works. Okay. So here you're employed by Lockton Limited as an accounts assistant. Lockton Limited pays its employees through the bank every month and maintains a wages control account. The summary of the last month payroll is shown below. So what would they ask you to do? You have to record the wages expense. And what is your HMRC liability? The net wages paid to the employees and the pension fund liabilities here. So what we now have to do, we need to identify what accounts they are looking at. There are some journal entries you need to make. And once you've done them, let's see here, do we have anything or any purpose of the wages control account, how that works. So for this one, guys, I'm going to just artificially create the wages control account. So I'm going to say here, this one is wages control. Okay, so let's say this wages control account will have debit and credit here. So we know this is the debit side and this is credit. I'm not going to do that, writing debits and credits. You're on the second unit now. You know already what's this all about. So let's say here, according to our knowledge, wages expense is not just the gross wages. It is that plus any employer's national insurance. So let's say here, wages expense account. That is the first one. We need to record the wages expense. How much that amount is going to be? That amount is going to be 45,833 plus the employer's national insurance contribution 2,045 plus the employer's pensions contribution 953. That gives you 4,888. So let's quickly do this as a center alignment. Yeah. So now I know it's an expense. Expense is always a debit. Remember on your debt click or Alice, you know expenses account are debit accounts. So that means the next journal entry has to be a credit account for the same amount, 48831. And we call that the wages control account. Now let's see here on the wages control account, we'll say wages expense for 48831. So we have that account created with that balance now. Once that amount is posted, this is how the wages control account starts. Now they're asking you here, what is the HMRC liability? So if I'm going to think about HMRC, what HMRCs take from the employee? They take payee, income tax, and then also they take the employee national insurance contribution. And employer also give HMRC the employer's national insurance contribution. So what we need to do in that case, we have to remember this is not your expense when it comes to the employee's contribution. For you, these are the money you collect from your employee and you pay to HMRC. Along with your own contribution, these will be classified as an HMRC liability. And remember, guys, liability accounts are, what do you know? They are all credit accounts, because in your debt click, you know the liabilities on the credit side. So I will do a credit entry here and let's find out how much is the amount going to be. We have the income tax 976987 plus any national insurance contribution 2045 plus 1822, which is £10,854. This is the money we have to pay to HMRC as your national insurance contribution as the employer and the employee's national insurance plus their income tax. So if I done the credit into HMRC liability account, which account I'm going to have a debit account? Here comes the rub. This is where the wages control account is going to step in. Wages control account, because we already created a credit balance, that balance is now going to be used to distribute that particular amount now. So what we're going to do here, the amount is 10,854, and we'll say here this is distributed to HMRC liability. Now let's look at the how much is your net wages, because for you the net wages, where it's going to go out of for the business, the money is going to be going out of your bank account. If it's money out of the bank account, is that a debit or a credit? It is a credit. When you see that amount is going to go out of your bank account to the employees, finally they rejoice. Hallelujah. Finally, I got my money. But it's only after you deducted all the employees' contribution. So what we know now, your salary is 45,833. Take away your income tax, 6,987. Take away the employee's national insurance and take away their pension, 953. So those three will go out of your wages. The amount you finally get is 36,071 pounds there. So again, we're going to use our good old wages control account to distribute this one. 36,071, and this will be the debit entry. So let's see here. Let's go back into my wages control account. I will say bank. The money will be paid is 37,071 pounds. We got it there. And last one is pension fund liability. How much you have to pay towards a pension pot. You're paying from the employee's amount 953 and you're putting your own contribution on 953. So let's say here pension fund liability. The amount is going to be equal to 953 plus 953, and that is going to be 1,906 pounds. So let's say here that is a liability, and again without any shred of doubt, wages control account appears here, 1906, and debit account now. So let's say here I have pension liability and for the amount of 1906. So now I think I have find out all the relevant people who are looking into my wages expense. That wages expense now distributed to 3 different entities via the use of the wages control account. So now let's say here, if I'm going to do a total, I'm going to say FX. That amount is equal to that amount. Can you notice that here? The wages control account, after we have distributed all those money to the relevant entities, it ceases to exist, like gone. Wages control account was created for that sole purpose. We got the money, we distributed to 3 different entities, HMRC, pension, and the employees, and they no longer have any amounts left. Only remnants of it is the wages expense. Wages expense will go into my profit and loss statement as an expense to the business, because for me, it costs to employ all those people 48,831 pounds. Okay, so that is a really good way of showing it. So let's quickly look into that slide here now. Let me check. Yeah, so here, so in this slides I have shown from the employees, you have net pay after the deduction. You have to pay pension fund, other organization contributions, voluntary contributions, income tax, and national insurance. So what we'll do here, the wages control account, it's created to distribute your expense towards HMRC, pension fund, voluntary contributions, and all the other necessary entities. So here, how we done it here, steps for recording payroll transactions, transfer the total payment, wages expense, and the wages control account, make entries for the payment of wages, that is the bank account, transfer the amount due for HMRC to HMRC account, transfer any pension amount to the pension fund, and finally any other voluntary deduction like a union fee, the childcare vouchers, and any sort of other things there, we will do that way. And that is the end of it. But I have one big question which we'll be able to do, which is this one here. I have this wages question, the journals question. Yeah, let's see here. This journal question, it sometimes appear in your exams. You given this question like this way. So here, for example, it says they have given you some opening balances. Use the form below to prepare the Heather Shaw's opening journal entry showing clearly her capital on 1st of June 2018. So they have given you some of the information. Oh, sorry, I haven't shared it then. Give me 1 second. Oh, share the screen. That's easier.
That's it.
Yeah, got it. Thanks, Emma. Absolutely fine. So let's see here now. We're sharing this here. What we have, the office equipment. We have inventory, cash, bank, trade payable, bank loan. So we know here these are either assets or liabilities. And with this information, we will be able to find out what is the missing information, which is a capital. So let's say here, I don't have to do the dates now. Let's say here, office equipment, and that is for the amount of 10,500. And then we have inventory. How much is that? 3,300. And then what else we have here? Cash for 200. And then we have bank. If it's a bank overdraft, it will be a credit balance. So make sure we'll do that there. And then we have trade payables. How much is that for? 1,700. And then we have bank loan. So this one is 2,500. So if I'm going to put them in debits and credits now, so we have 10,500, 3,300, 200, 1,400, and then 1,700 and 2,500. This is how we do it. But the problem is, if you look at the debits and credits, so let's say here, the sum of that one and sum of that one, it is not matching. Why? Because the difference between them is the capital amount, which is the missing figure. So the capital is going to be the difference between those two. It's going to be 11,200 pounds. Can you see here? Once that number is found, then these journals will tally up your debits and credits. This is what they're asking you. When you've done all of these numbers, if there is a discrepancy there will be one missing entry. That missing entry in this scenario is going to be a capital. Obviously, you know, capital is a credit entry. Once you found the difference between them and you input that figure, your journal will match now. What is the narrative I'm going to write here? If I'm going to do here a narrative, I'm saying recording opening entries for the financial year 166. That's it. That is a journal entry with a proper narrative on the back of it there. So this is how we do it. Next question you have here. You employed by T-Stale Supplies as a accounts assistant. Let me just put one more line here, because I need to do a journal entry and a narrative. So quickly have a look at it. Today, your account supervisor tells you that a credit customer, Hinson Haulage, has ceased trading, owing T-Stale Supplies £440 plus VAT. Record the journal entries needed in the general ledger to write off the amount and the VAT. So what you notice here, guys, when a customer become irrecoverable debt, has to be written off from your account as an expense. But it's only the net amount we lose. In this scenario, £440, because the VAT now can be claimed back from my HMRC because we didn't enjoy that income. If I received any money of it, then of course I owe the VAT. But since I have received nothing of it, the VAT I may have already paid now can be claimed back as a VAT refund for what do you call when you're doing our next VAT return. So here, how would you do it? Remember, this customer was part of a control account. This is the receivable ledger control account. So RLCA normally has a credit balance. Now we need to take that amount from that. How much is that amount is going to be? It's going to be 440 times 1.2, which is 528 pounds, because there is a VAT of 88 pounds inclusive on that debt there. So when you're going to do that, that amount has to be credited to the RLCA. So the amount is removed. And what we'll do, the VAT account will have 88 pounds debit. And the last, we have the irrecoverable debt account, and 440 pounds, that will be a debit. So in this scenario, what happens? We write this irrecoverable debt off. This will go into my profit and loss statement as an expense, because basically when we record the initial sales, we have done £440 plus VAT in my sales day book, and eventually it was going to the RLCA. Now we're going to remove it from my RLCA with that same details, but in the opposite. Basically, we canceling that sales means we got no income from them. We basically lost it. Okay. Now, this is, we're going to do a narrative for that one. Narrating says written off an irrecoverable debt of what is that company? Hinson Haulage. Yeah, we've done our job here. And then also there is one more question here. They're asking you, the business has prepared payroll information as follows: gross pay for employees, income tax, employers' national insurance contribution, and employees' national insurance and employer national insurance contributions. Complete each line of the journal by entering the correct entry into the debits and credit column. So for this one, guys, let me quickly check the question in my Osborne questions I did have earlier. Give me 1 second, not this one. Where it is? This one. Give me 1 second, please. Was it from here? I don't know. I can't remember where I got it from, but it was one of those questions I found out earlier. Let me just give us 1 second, please. Let me quickly check it. Oh, yeah, I found it. Found it. Excellent, got it. Let me find the thing, share screen. Okay, so this is how the journal was looking like. Assume you guys all can see it. Debit and credit. They have it like this way. So can you notice here, this is most likely to be a journal entry into a digital bookkeeping system. This is not something we done manually, like the wages control, which you have noticed here. Can you see here, we use the wages control account, but when it comes to the digital bookkeeping system, we use the nominal codes to identify which number they go under. Can you see here, this one has 700 codes or 7,000 codes. Here they have the 200 or 2,000 codes. The code 7 means these are expenses. Code 2, these will be either liabilities or the money you owe to your employees, means your net wages. Unless you pay them, this will stay in your book as liability until the payday, because you normally do the payroll few days before you actually pay your employees. So therefore, until you pay them, they'll stay in the system as a liability. Once you pay them, it clears from the system. So let's say here, the gross pay to employees, income tax, employers' national insurance, employees' national insurance contribution, employer national insurance contribution. They're asking here gross wages. You know the gross wages is the part of the wages expense. So we put 54458. That is your debit entry. How much is your national insurance employer's contribution? 6127. But now remember, guys, you know these two numbers basically mean this is your wages expense. This is your wages expense. So now this is both of them 700 codes there. We know what we created is your total wages expense. And remember, once we done that, we usually have done the wages control account. But in this scenario, we haven't done the wages control account. Instead of that, we're just doing as a journal entry into a digital bookkeeping system. Basically, we use the digital bookkeeping system to distribute these two wages expense to all these different entities. Now, what is your pay, which is your liability to HMRC? This one is £10,016. And then what is the national insurance is going to be? It is going to be 5,052 plus 6127. Can you notice these two will be your HMRC liability. These two will go to HMRC. And then, of course, the rest of them will be your net wages. How I'm going to know what is your net wages? Is your gross wages of 54,458 minus any money you pay from your wages, which is your tax, and the national insurance of employees, 5,052. Can you see here? 39190. You don't take away 6127 because that is the employer side of it. So now let's work out my journal will match each other. So let's say here, let me do a sigma. And then it is saying here the total wages expense was 60,585. And then let's do another one here on this side and see whether we get the same number. Fingers crossed. We did. So can you notice that if these two are both matching, basically what we have done, we looked into our wages expense, and that wages expense now distributed one to HMRC as a payee income tax, another one as a national insurance, and another one, this is the money, goes to the employees, and once it paid, it will go as an money out of the bank account, but at the moment, it is going to be just a liability in the books until we pay them to your employees. Okay, so this one is the final question for today.